Global economic cooperation has, it seems, fallen by the wayside in favour of national interests and the pursuit of export-led growth. And the issue of currency wars is unresolved. The weekend's IMF meetings in Washington saw the world's two largest economies trading tit-for-tat accusations. China says US monetary policy is too loose. The US says China is accumulating vast reserves at the expense of other economies. Well, to discuss the potential fallout from this, I'm joined now from London by Vanessa Rossi, who is Senior Research Fellow at Chatham House. Vanessa Rossi, welcome to the programme.
Hi there.
Well, George Soros has weighed in to this discussion, warning of a global currency war pitting China against the rest of the world, which could lead to the collapse of the world economy. Are you as concerned as he is?
Well, I'm concerned that we're not really achieving the things we want to achieve with the cheap money that's flushing around the world. The problem with this is that it's really intended to kick-start the economies which have lapsed into recession, particularly, of course, the US and Europe. And yet what's actually happening is that this cheap money is flowing out of these countries and causing trouble in the emerging market world. Now, what we really want to do is get this money back and put it to work. We need it to go into investment. Even to some extent, we need it to go into consumer spending. So I think this is the real issue we should be tackling. And instead, we're ending up with this tit-for-tat about the implications of these currency changes. I think, to be frank, the idea that some change in the Chinese currency alone is suddenly going to save the world and solve these problems is rather foolish. That's part of the problem. So both sides have problems.
Yes, it's this race for exports between the developed countries that seems to be driving a lot of this. There seems to be quite a lot of tension between the US and Germany over the weekend as well.
I'm not at all surprised, because one of the clear winners this year from the export boom in emerging markets, and particularly in China, has been Germany. Germany's exports to these countries have been up by 50 or 60%, far higher than the gains for other European countries or for the US. And that's partly because Germany is so geared to this kind of growth, both helped by the weak euro in the summer, but also because of its advantages in these export sectors. Now, you can turn around some of the currency effects, and I'm not at all surprised if there's going to be some tensions between Europe and the US about that one, but you can't easily change the other issues about which export sectors you're placed in. You can't suddenly, by changing a currency in a few months' time, change the whole orientation of your industry. You can't do it if you're Greece, and you can't do it if you're the United States.
You mentioned that the currency war is likely to hit export nations, surplus states, more. Are there some countries, perhaps in Asia, who are more vulnerable than others?
Well, clearly one of the problems of these tensions and the spillover effect has been on Japan. And I think if we look at the effect of these capital flows going out, trying to find currency gains around the world, the Japanese yen has been pushed upwards by the problems of both that and the fact that Japanese investors themselves are sitting at home not knowing where to go. We're not sure where the world economy is going in the next year. We don't know which economies are going to be rising or which ones could lapse into recession and so forth. This confusion is causing a lot of problems. But for Japan, this rise of the yen is really hurting. We can see that in spite of the fact that they're well placed in Asia, their export gains are not at all as big as the ones that we're seeing for Germany, for example.
Now, there's a lot of disappointment with the IMF meeting over the weekend. Do you think the organisation is simply too weak?
I think there is still a great deal of doubt about what its role is and where it should go to. This was already true before the crisis. We know that the IMF funding had been wound down, and the IMF itself, to some extent, was winding down, reducing personnel. Then along comes the crisis, and there's a big flush of life. They have to redistribute money and provide aid. Unfortunately, in the midst of the crisis, we all did that. Now we're coming back to the same old problem of where is the role for the longer run. It hasn't carved out a new area of the financial stability or the macroprudential checks that we all want to see in the future. It doesn't seem to have done that. It seems to have stayed with the traditional function of supplying emergency finance, and yet we're not really sure that that's where we're going to be going to in the future, or whether this will be more regionally oriented, as, for example, the moves with ASEAN suggesting in Asia, moves towards the European stabilisation mechanism are doing in Europe. So I think the IMF is a bit confused, and then on top of that, we also have this confusion about who should be members, who should be deciding factors in the IMF. That clearly has not been resolved either for changes in the governance.
The IMF
and neither has the economics.
The IMF looks as though it's going to try and restructure by the G20 meeting. Now, America's Timothy Geithner is urging the IMF to couple reform of the organisation with reform on emerging market exchange rates, I assume, particularly in relation to China.
Yes, but then if it's becoming a sort of instrument for actually activating currency wars, then I don't think the IMF itself seems quite comfortable with this role. It's a very strange position to have got locked into, and the IMF to some extent has been a major proponent of the belief that exchange rates are very effective. Personally, I think that there needs to be more discrimination about that view.
How do you see this playing out?
Quick fixes don't work.
How do you see this playing out?
Well, we're probably going to get some modifications through, as you're suggesting. By the time of the G20, there'll be some proposals made. It's not at all clear who will actually agree, and it's certainly not at all clear that the other emerging market countries are going to look to a reformed IMF as their major vehicle for finance and deciding global governance. I think they'll continue to shun it to some extent, even if the IMF now adopts some measures that should be mollifying their demands for governance. So I don't think we're going to have a very clear picture even after the G20.
Vanessa Rossi, great to get your views again. Thanks so much for joining the programme.